I think the best way to think about that question is to consider the alternatives people have. So you're a normal person and you want to save money for retirement or to give to your kids. So you put it in a savings account, you get 5% interest. The monetary inflation rate is 7 or 8 or 9%. You got a negative real yield of 3%. If you end up with a negative real yield of 3.5%, then over 100 years, $1 million saved is worth $30,000.
The executive chairman and co-founder of MicroStrategy, Michael Saylor, is unwavering in his support for both the underlying network and Bitcoin, the world's most valuable crypto asset by market cap. Saylor thinks that Bitcoin is the only asset that is both the best cryptocurrency offering and appropriate for all types of investors globally. And he has demonstrated that with a number of multi-million-dollar acquisitions for both his personal portfolio and his business analytics company. The only publicly traded firm that currently has more than 152,000 Bitcoin on its balance sheet is MicroStrategy. In a recent interview with Altcoin Daily, the executive chairman of MicroStrategy notes that, if accepted, the Bitcoin ETF applications from BlackRock's and Fidelity's Spot will provide institutions with a much-needed opportunity to become more involved in Bitcoin and the whole cryptocurrency business. Saylor feels that institutional investors who have been waiting for the proper time to participate in the market would benefit greatly from this, but he also thinks that other investors should be heavily investing in Bitcoin. When asked why individual investors should invest in Bitcoin at the current price and given the current economic climate, the executive chairman of MicroStrategy examines the other options to Bitcoin and why they aren't significant alternatives for serious-minded investors. Saylor starts off by using the example of bonds and savings accounts, which, given the continuous depreciation of the dollar and other fiat currencies, promise to do a very poor job of assisting individuals in increasing or preserving their wealth. You would only lose a significant portion of your wealth owing to currency depreciation, according to Saylor, if you invested in bonds. In a manner comparable to that of equities, real estate, and other asset classes, only Bitcoin remains as the best investment option for all investors. Please take a moment to like this video, subscribe to the channel, and enable post notifications so you never miss any of the footage from this Saylor masterclass that we will be bringing to you.
For the average person, saving money in bonds with a 3.5% or 4% interest rate when the currency expands at 7 or 8, that's a losing proposition. You lose 97% of your wealth over the course of 3 generations. So clearly bonds don't work, right? And savings accounts don't work. So the next question is, do I just put all my excess money in the S&P index? Well, traditionally, the money supply in the US is expanding at 7% and the S&P index is going up at 7%. So if you save $1 million over the course of your life and you put it all in the S&P index, then in 100 years, it'll be worth $1 million. So that's wealth preservation, but you're not doing any better than that. And that just kind of assumes that, that the S&P 500 is going to be relevant for 100 years. And you can stick around the country. But it's like treading water. The next issue is, well, so what I put in real estate? If you buy real estate, you're an average person. Can you buy a building? Probably not. Can you buy a warehouse? Not easy. Maybe if you're a rich family, you buy warehouses, right? Rich families buy warehouses, city blocks, and buildings, but the middle class person doesn't. So how do you buy $4,000 worth of a building? Can't. Okay. So the issue there is your property rights are inferior when you're buying shares of stock or a security versus the underlying property. If you own the building, you can mortgage the building, sell the building, upgrade the building, build 10 floors above the parking lot that the building has. You can develop the building. When you own a share in a REIT that owns the building, like you own 1/100th of the building, you don't have any of those rights. You can't do anything to the building. You're just along for the ride, getting 1/100th of whatever cash flow the general partner decides to distribute to you. And if they make stupid decisions, you're stuck with them, right? You don't have any property rights. You're inferior in your economic rights. So owning shares of a REIT to get property for 100 years, not a great idea. And that leads us to the problem of securities. What is the problem of security? So you have some money, you invest it in Apple stock or Amazon or Facebook or Google or a REIT that owns a building. The dilutive problem with securities is there are risk factors. First of all, there's a management team. They're going to take 1% every year. They're not doing it for free. They're charging you to manage the company or the building, right? And if you're lucky, that's only 1%. You want to see that in action? Just go look at any ETF. The ETFs charge 90 basis points. If you want to put money into a Bitcoin, BITO, or whatever, they'll charge you 90 basis points just as the management fee. So about 1%. What's the cost of 1% over the course of a lifetime? An infinite duration asset, you would basically multiply it by 20, 25. So it means that when I charge you 1% to manage your $1 million, I'm taking 20% of your money. Okay. I'm taking 20% of all your wealth to charge you 1%. So when you run a company, you also have you have the risk of labor, right? Your company may unionize. So you've got labor expenses, and what happens to the equity value when the company unionizes? Well, the union just takes all the profits, and the equity values of those companies start to trend towards zero. So labor is another risk. The third risk is your competitors, right? Your competitor may come up with a better product and you end up like Yahoo squeezed out or AOL squeezed out by Google. Well, then your stock's going to zero, right? I mean, how many companies actually had a competitor? Xerox, Kodak, world's full of great companies. Where are they today? They end up getting squeezed by competition. The fourth issue is technology, right? You may just get obsolesced, right? Maybe you own natural gas fields or oil fields and someone creates nuclear power plants and they don't need your oil anymore. Or maybe you sell the world's greatest chemical cameras and people don't need cameras anymore. They have digital cameras, right? There's always that kind of risk from technology. And then there's execution. Maybe you just don't ship the iPhone 47 to be that good, right? Maybe the iPhone 13 is good and the iPhone 15 is not good, right? And the world's full of examples of that, like Firestone tires or something, and I ship a tire and the tire blows out, and now people stop buying my tire. Or New Coke. Remember New Coke as a product launch? That didn't work out well. So when you're investing in a company, you're not just getting a pure investment. You're actually getting an investment in an asset, but you're getting hammered and diluted by force majeure, by bad weather. Yeah, you might get a war. You might get a tariff or a trade war. Like we just decided to put a tariff of 20% on all Chinese imports. Oops. If you had a factory in China, what happened there? And then maybe get a real war where someone just impounds your ship or blows up your factory. That happens too. We have real wars all the time. So what's the return on the S&P index? 7% a year. What's the monetary inflation rate? 7%. What's really happening? Well, all these companies, they're just barely holding their wealth. And so what would happen if I got rid of all those risks? What if I could buy a product that was never going to obsolesce, that's good for 1 million years? What if there was no management team and they work for free, right? What if the product is run by computer programs that don't charge a fee? What if there's no labor? What if it's a digital product, so there is no chance to block it via trade war or destroy it via real war? What if it was an indestructible, immortal, incorruptible product? Well, when you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network, or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world in 10 years, 20 years, 100 years, 1,000 years, 10,000 years? The product's not obsolescing. It's 1/21 millionth of everything. You see, the iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles, and maybe you won't need televisions. Those things can obsolesce, but will you want 1/21 millionth of all the energy in the human race? Probably.
Please contribute your ideas, opinions, and observations in the section below. Be sure to like this video, subscribe to the channel, and enable post notifications if you want to see more like it. Thank you for watching.